So, yeah, the market got hammered today, but I think the noise from higher yields, which, by the way, have come down precipitously, to an aggressive Fed, and now, of course, a 1930s-style global trade war, all overshadowing an American economic revival that, by the way, many people thought was a relic of the past. The American consumer has stepped up to the plate, and the latest signs, we got them today, right before the open. Best Buy, a lot of people thought it was dead. No, beat on revenues, beat on earnings, comp store sales up 9%. The street was looking for 2.9%. Moreover, the guidance was phenomenal. $5.75 is a dollar more than consensus coming into the session. Kohl's, also another one, beat on top and bottom lines. Their operating margins expanded. Full year guidance, $5.42. Wall Street was looking for $4.75. That is a huge difference. And then after the close, Gap stores, well, they got into the act too, posting financial results that beat, yes, on the top and bottom line. By the way, comp store sales there up 5%. Wall Street was looking for 1.7%. And it's good old Navy, where comp store sales were up 9%. All of this giving management the confidence to increase the dividend and offer strong full-year guidance. In fact, the retail index, that RLX, up 36% since August. As for today's session, in this reaction to the United States finally getting tough on China and its practice of dumping cheap, low-quality steel, I'm saying this was the ultimate Wall Street temper tantrum. Lost in all of this were reasonable comments from the Fed Chairman Powell, a slew of upbeat economic data portraying an economy that, by the way, is making a Phoenix-like return to prominence. But for more clarity, let's ask Danielle DiMartino Booth, former Dallas Fed advisor and the president of Money Strong. First, I have to get your reaction to the way the markets reacted to President Trump's new tariff proposal. What do you think?
Well, I think there was a lot of confusion in the markets in the afternoon, but even going into the announcement that I think, again, took markets by surprise. Just during Jerome Powell's testimony today in front of the Senate Banking Committee, Charles, we saw the market gyrating around it. It didn't close anywhere near its lows of the day. Again, confusion reigned supreme in the market today. I, for one, was paying much more attention to the gigantic party going on in the bond market.
Well, I mean, speaking of bonds, we were at that 3% yield that was going to destroy the economy and the stock market. Now we're back to 2.8%, and the markets have gone down anyway. I mean, what do you make of it? What's the bond market telling you, and what are people missing here?
Well, I think the bond market is sending a warning shot. The difference between the 2-year and the 10-year yield, and I know that's getting into the weeds, talking about the yield curve, but that is showing us that there might be a little bit of slowing going forward in the economy, or, Charles, it might be simply reflecting stocks being giving back all of their gains for the year. It's hard to say what the bond market is parsing, but it was undeniable what came out this morning. Look, we've seen manufacturing in this country right now. It's expanding at the fastest rate since May 2004. Backlogs are extremely strong. Right behind it, and despite the fact that the price is paid, that input prices being paid right now by American manufacturers are up at a multi-year high. Again, we've seen bond yields come down. A lot of mixed messages, but very strong economic data. Look, Charles, I'm not going to tell you my age on camera, but let's just say that jobless claims this morning fell to the lowest level since before I was born.
Well, okay.
They did.
By the way, on that manufacturing data, one of the things that drove it up, too, was the employment component. We hadn't seen that in a long time. But
very strong.
Give us your thoughts now, finally, on Jerome J. Powell. He spoke before the House, which was, in my opinion, a clown show. But it was a more respectable testimony today, Q&A. And it seemed to me that he tried to make sure that investors understood he's not going to derail this rally. What do you make of it?
Well, he was very measured, and it was clear that the senators were much more prepared. They weren't trying to bait him with political questions to the same extent that they were on Tuesday. But again, if somebody asked him a simple question today, he gave a yes or no, which it's hysterical to see the look on these politicians' faces because they're not expecting somebody to be so forthright and curt in their answers, but he's not there to waste taxpayers' money. And that's why I just, this guy's got my stamp of approval from day one. But Charles, he did reiterate today that it wasn't the Fed's place to take a position whether stocks were going up or down. And he's absolutely right. Look, we don't need to audit the Fed,
but
as so many have called for.
Was that a wink-wink, though? I mean, the Fed does look at the market, right?
No.
I mean, wink-wink, come on.
Look, the Fed certainly does pay attention to the market, but Jerome Powell's a big boy, and he's going to let investors take risks on and assume the consequences of doing so. I applaud him. He's quite refreshing.
We have to go, and I always appreciate you. You're quite refreshing, and you're quite knowledgeable. Thank you very much.